Hello. Today we'll study the AUDUSD chart and we'll start from scratch. We'll start from the beginning, all the history of the chart, and we see how we can analyze the chart using Gann percentage and Gann angles. When it comes to Gann, we need to understand the moves of the chart. It is very important. If you understand the movement, if you understand at what percentage this swing high or swing low has been created, so you will be able to forecast the future turning point or the future support and resistance. Of course, there is rules we need to follow when we draw Gann angles and when we draw Gann percentage. Let's take a look at Gann rules, and we can see that from this is the advanced level, the advanced lesson for the rules. And here chart history. I studied the chart history and note each swing percentage on the chart. This will help you to understand the price chart movements, especially when you find repeating or the same percentage level at various places on the chart. The importance of high and the lows from important top or important top. If important swing percentage overlapping with major Gann percentage from another lower top, you should consider this area as a trend reverse. So this is basically what we are trying to do every time when we analyze the chart. We are trying to find a repeating percentage. We are trying to find a confluence levels of percentage. It will be better also if you have a Gann level at this level, and more if we have Gann angles at this area. So once all this happen together, we will consider this a strong position to engage or a strong area to engage with the market, and we'll go short or we'll go long. So let's start with AUDUSD and we see how we can analyze the chart. This is the Gann indicator, Gann analysis indicator for MT4. We have the two options here in the Gann analysis mode. We have angles, we have percentage. So we'll start with the percentage. To keep the thing simple, once you are studying the chart, no need to go through 1% by one percentage level by 1 percentage level. There is an option here called fall percent. So once you do that, you will have the majority of Gann percentage. So we can see that we start with 3.125, 4.166, and ending by 100%. We'll zoom and see that 3.125 did not work. You have 4.166 is working. You have a 5% didn't work. So I'm deleting here. 7.1428.571 is not working. 8.33 almost working. 10% didn't work. You have 12.5. You can see that it gave reaction to the upside. 14.28571 didn't work. 16.66 gave reaction for 2 weeks. 18.75 no reaction. 25% major give you here a reaction for a few days, because this is the weekly chart. You have the 28.571 give you the reaction. 33 we did not reach here, but I'm sure that if we take other percentage, we can see that some percentage overlapping here, you will have a cluster level that you can engage with the market. 37.5 worked, 40% was broken, and after that you have the 50%. Of course, if we zoom the chart, we can see this is not the historical high, so I will not carry the 50% from here. So this is why I'm cutting, and the rest of the percentage I'm deleting. So what I understand here is 33.33 is working, you have 37.5 is working, 40% is broken. So, and here is one swing and one swing I missed. I don't have it in the on the percentage. So let's see, before the 25% on the table we have the 22.22%. So if we put the 22 0.22% on the chart. We can see that it was where the market stopped. So 40%, the level after the 40% is 42.8571. 42.8571. We can see that we did not reach it. So for that you need to get the halfway between the 42.8571. 42.8571 is coming from 3 divided by 7, and the 40%, which is 2 by 5. So the halfway between both is 41.66, which is coming from 5 divided by 12. So 41.66, and we can see that we did stop the market at 41.66. I'll just put a note here, it's coming from 5 by 12. 40%. I remove it so I will not have any misjudge when I'm looking to the chart and see that there is a 40%. It means that it worked in the past. From here, because I'm studying the important high and important low, because if I was there on that day trading here, so I will take percentage from this high, percentage from this highs, and percentage from this high. But here, once I'm studying the chart, I will go through quickly to the most important high and top, the top and bottoms, so I can understand the strongest percentage levels. From that high, I'll take a different color, and I will take fall percentage. So I will not waste the time. So you have here, we can see that the 5% work. 6.25 is not that perfect, but it's worth watching. 7.8 is not working. 12 and 14, you have here 16, you will have here 18.75, you have the 25%. So this is what I'm talking about. You will have the 37 from the high, and you have 25 from a different high, so it's a confluence level. So that confluence level give you a good indication that something is going on in the market, and you need to pay attention and watch the price action so you can enter the market. We studied the chart before, and we can see that, of course, all these levels to the downside I'm not interested. We can see that here 28.571 stopped the market here for almost more than a month. So we can see from that high 28.571 was overlapping with 41.66, and it give you the push to the upside. Okay, and after that you have a retest again to the same area and another push to the upside. So this is, you need to note that 28.571 2 times worked. 41.66 it was since that historical high in AUDUSD that time in 1997. The market started changing the direction at 41.66. This is very important. Okay, 41.66 is very important, and this is, you need to keep a note on that all the time. Alright, 25 did work 1 time. Okay, so we can take also some percentage from here and percentage from here and percentage from here, and we study. Now we'll go to the upside, and we see that from this low I will take the full percentage. Again, I have the full percentage. I'll take it with the same color again, and I'll put it from here, and we see that 3.125 nothing. All this is, I will delete. Here you have 12.5 give you the a very nice reaction to the downside. 14.2875 is nothing. 16, you have 18.575 was broken. 25 was broken. 28 give you a nice reaction. 33 didn't work. You have the 37 didn't work. 40% didn't work. 50% didn't work. 60 and 62, and you have the 66. 66.66 give you the reaction here for a long time. Alright, so the 66, you can see that it was a strong level. I'll mark it here because the market was trying to break out this level more than 4 times. You have here 1 downside, then again 3rd time, 4th time, and the 5th time the price broke out this level. We keep move forward and we see that the maximum that we reach is 100%, and that percentage, the full percentage, but we can add more manually. So I'm missing here few things like this swing high, this swing high. I'm noting here the 66 is very important. So 18.75 and 25%, you have halfway on that time, and in between these two percentages is the 20%. %20 is not that perfect, but you can take also 22.22. Remember, I'm still studying the chart movement. 22.22 didn't work. So 2 by 9 is 22.22, and the 20% is 1 by 5. So the halfway is 3 by 14. So 3 divided by 14 multiplied by 100, you get 21.28471. I make a copy and paste, and I keep it here, and you can see that it was exactly where the market stopped. The double of that percentage is 42.8571. One of our rules that you need to keep the double of the swing percentage. I'm deleting all the unnecessary. So you can see that the 42.8571 did stop the market. So what do we have? We have here 28.428571. Double of that move from here is 42.8571. So the double of that percentage is very important. Let's see here. One of the rules is if price finds support or resistance at certain percentage level, you should expect support and resistance at double of this percentage level in the future. For example, from all times high, price finds support at 16.66 and create an important low, then you should consider 33.33 double of 16.66 as a strong support level in the future. This is our rules for Gann when you are trading or when you are analyzing the chart. So this is very important and you should consider it all the time. So we'll move forward, and you can see that 100% didn't really work, but 42.8571, if we multiply it by 2, you get 85.71428571. So let's see now if this percentage give indication or give any resistance in the future. We can see that with a simple rule that we are using, that you have the swing here 21.428571, the double is 42, the double of the 42 is 85. So the 85 give you the reaction here. We can see that the 85% give you the reaction to the downside for 1, 2, 3, 4, 5 weeks to the downside. So this is a very good indication, and if we take the future, we have 171.428571. Of course, this will be a future level that I'm watching because it's coming from the historical low. So I keep all these levels. You don't know what will happen one day. So 3 by 14 is 21. 3 by 14 is 21. So 3 by 7 is 48. Right? So the double of that is 6 by 7 is 85. So you have 6 by 7 is 85. And you have 3 by 7, which is 3 by 7 is 42. Halfway between both of them is 64.28571. 64.28571. We can see that if we put here 64, we can see it will be higher than the 62, but it didn't give a reaction, long reaction, and this is why you have the 66 important. So for that, I will keep the 66 better than this 42. I was just checking because I don't remember really the chart. I need to look at the chart all the time. So now you have 100. After the 100%, you are putting the normal Gann percentage. The normal Gann percentage after the 100%, you have 112.5. You are taking all the percentage after the 100%, like 103.1285, and so on. So you have 112. Did stop the market for some time. Before that, if we need to check the other percentage, you have 108.33. 108.33, nothing. Before that, you have 106.25. So we can see that 106.25 did stop the market from the historical low to the downside. So this is very important. So we have 106.25 is very important on the chart from the important low here, from the historical low in AUDUSD. You have this downside for a long time made at 106.25. So you should note it somewhere. You keep the percentage on the chart so you can refer to it anytime. Alright. So after the 112, you have 125 of 133.33. So we'll put it together now. You have 116.66 first. $116.66, we have 125. And you have 133.33 in the future. So now 112 didn't work, you have 116 didn't work, you have 125 didn't work, 133.33. 66.66 by 2 is 133.33. So you have the 66 here, 66.66, give you the reaction here. So 133.33 is still a strong position in the future. So you should keep it on the chart. you have, before that, you remember we had a 62.25. The double of that is, let's check 131.25, and we see if this give a reaction to the upside. We can see that the historical high so far in AUDUSD from the historical low made at 131.25%. So this is a very important level that I should keep a note in case I need it in the future. Okay. So you have 116.66, 112.5, halfway between both of them is 114.28571. So you have here, you have 16.66 and 12.5. The halfway is 14.28571. So for that I will put 100. To 8571. Move that, remove that. You can see the 114.28571. Stop the market for few weeks. So now we need to go to check also the swing down here, and the percentage, at what percentage we stop here, and we carry on from the future. So we have here note of 41.66, you have a note of 66.6 to the 66.66 to the upside, you have an 85 is very important, and you have 100% did not really work, but the most important 106.25, 114, 125 didn't work, 131, and you are watching 133 in the future, and after that you have 171. Of course there is 150 in the future, and also other percentages that we can watch. From what we learned so far, let's check something. Once we reach 106.25, let's say that we were there trading the market at on 2008, and I know that we stopped at 33.33 and 41.66, and we stopped also at 28.571. So systematically I will just put these numbers. I will start with the 33.33. I'll take the red line. You can see that 33.33, 41.66 is the important one. That's what I'm saying, that you need to watch but before that you have a 37.5, so you need to watch all these levels, because you can see this is a sharp move, you don't have any swing, so you can take any percentage. So we have 37.5 that stopped the market. So you understand here the 37.5 was broken by a bit, and here also was broken by a bit. So you need to consider that when you are analyzing or trying to see the reaction on the chart. You have the 25. If we go to the daily chart and we see 25 from this low, from this high, give you the reaction here for a few weeks. You have the 37 was roundabout here. We understand that 28.571 did work in the past. So if I keep it here on the chart, I can see that 28.571 overlapping with the 37 from that historical high that time was a good area to engage with the market to the upside. So it is because we understand the moves here, we understand at what percentage the market stopped, so we can anticipate the future turning point or the future support or resistance. So we'll follow the chart analysis in from this low here. Of course, I need to study the other swings like here, especially when you are trading forex, because these swings can be useful when you are trading for a short time. This percentage is good when you are trading for a long time. So you consider this percentage when you are looking for a big moves to the upside or to the downside. But by studying these swings here, so you will understand the rebating percentage that the market stopped in between the important high and the important low. So for example, I know that the 5% in AUDUSD is working well. So whenever you have a drop of 5%, you should watch a reaction, and you can engage with the market for a few days, and you can make a good trades at this 5% level. So we can see here 5% did work here, and when we go forward and we see here this swings, there was a 5% here, there was a 5% when we go to the daily chart and we see it. So by understanding that, you can make a good money by understanding these moves. So I'm just going through the major levels, but in the future when we do signals, I will explain it also in details. So I will go here and mark full percentage, and I will use the red font, the red color. So 31, all these levels didn't work. Again, you have the 18.571 didn't work, you have the 25 didn't work, you have 28 didn't work, you have the 33 didn't work, 37.5 did work, 40%, almost 50%, there were no reaction, and you have 60%, no reaction, 62%, 0.5 no reaction, 66.66. It was give you the reaction for 2 days. Remember that 66.66 was strong here, so you should mark here 66.6 when you are drawing from that level as a strong level. So you need to watch the resistance at this level. 75, nothing, and after that you have 100%. What we learned here, we learned that the 28, the 87, 85, let's take a copy from that percentage, did stop the market. So automatic, I'll keep the 85 level. We can see that 66.66 stopped the market for a long time. Double of 66.66 is 133.33. From this important low, we are getting a repeating percentage that stopped the market for 5 weeks or 6 weeks, overlapping with 133.33. So that time you can say that this was a range, but this range is not broken yet. So if you get one day, if you get a move to the upside, you should anticipate a good reaction to the downside. Or if this is not happened Of course you will not get it one time like that, maybe you will get it like that, okay, and then you will have a reaction to the downside. If you broke to the upper side, this level is still valid till we broke it, okay. So this is a very important level that you watch, especially the 85.71428 and the 133.33. so this is in advance. You see today we are at 76 and this price is 1.114, so it's very high level to watch in the future. 60 and the 50, halfway between the 60 and the 50 is 57.1428571. so it's coming from 4 by 7. I just need to take the full percentage. So if you put the full percentage here, you can see it is not really great. So let's get the percentage that stopped the market before. 100, it's 1 by 2 with the 50%, and you have 4 by 7 is 57, halfway is 5 by 9 divided by 9, which is 55.55. 55.5555. This is the percentage that I should be watching, and I'll mark it here, sorry. Keep in mind that this percentage is broken by a bit. When we come here, we broke by a bit, and after that we come to the downside. The price starts falling down. So 55.55 is very important, and maybe we need to adjust it when we do the full analysis. This depends of if we have something at the 55.55 or it needs a bit adjustment, okay. So from here to here, I need to study also the chart. I just need to highlight something. We have 18.75. You remember here, when we have an 18.75 didn't work, we have a 21.284871. If we take that percentage from here, you can see 10.751 give the reaction for sometimes 21 with didn't reach there, but they give you a reaction to the downside to few days. So this is very important level, as we understand from the chart movement before. Double of that percentage is 48.8571. If we take from here, we can see that it didn't really work, but you can see that once you broke, you came down and you start moving, work it as broken for a resistance and then acting as a support. But after that, you need to cut the lines, because you can keep it and use it, but there will be a confusion. So my recommendation is just to keep it here. If you have an important percentage, just watch when it's broken, come down to the same percentage level again, so you can engage with the market. This is from the experiences, not from the rule. Okay. Back to the weekly chart. This is what we understand so far. 55, it's a new percentage that we should watch. 66 worked here, not that perfect as it worked here, but it was watching. You have the 85 is deserve watching, because it did stop the market for a long time. Okay. From that low here, we'll start using the percentage. I will not make the full percentage now. I will start with the percentage that we stop is 21.428571. 21.428571. No reaction. You have 33.33. No reaction. Put 37.5. Can see that the 37.5 give exactly the high, the historical high that we have in AUDUSD from this low. So 37.5 is important now with us. Okay, I need to check at what percentage we stop here. I think it's 25%. Check 25%. Not there. Next percentage is 26.66. You can see that the 26.66 did stop the market for some time. Okay, so from this low, there is nothing wow, we can say that you have a 26, which is the first time that we see the 26.66. You have a 33.33 didn't work. You have a 37. So this is why all the time look for a confluence level that you need to trade. Don't only rely on one percentage, but you should have at least some percentages that you can watch the market. It doesn't mean that you will not trade one single percent, but all this need to be you have a strong opinion about the market and how you you see, you know, like from experience. I know that in gold, for example, and sorry, in oil, 16.66 is important. So if I have the reaction at 16.66, I just wait till the end of the day closing. I will engage to the opposite side as long as it's confirming my point, because when I studied the chart, this is what I found. So if you study the chart and you see that there is one single percentage is repeating all over the time and it's really working, so why don't use it? Okay, so this is the most important levels that we are watching in AUDUSD. Okay, I need to study here to the downside, I need to study here to the downside, and also here need to study to the downside. Quickly, what do we have? We have 41.6 is important. Okay, so from that historical high when we start trading in AUDUSD, you have 41.66 give you the major low. That major low having some interested percentage or stronger percentages here. So from that historical high that we have so far, automatic, what come to my mind, I will put 41.66 on the chart before doing anything. And I know the 41.66 is 5 pi, coming from 5 pi 12. I'll mark it at a strong level here. Now from this historical high, I need to understand at what percentage we stop here, at what percentage we stop here, at what percentage we stop here, and at what percentage we did stop here. We can see that here we stop at 28.571, 37.5. Let's put these percentages first. 37.5. We can see that it stopped the market as it stopped the market here. Bear in mind something, every time it's broken by a bit. Here was broken by a bit. Also here was broken by a bit. Okay, so the 37.5 is very important. You can see that majority of the historical or the important low created at this level, and you have the 28.571. No reaction at the 28.571. I need to understand here at what percentage we stop, at what percentage we stop, at what percentage we stop, so we can have an confluence level here in the future. We'll start with 12.5. was broken. You have 16.66. We did not reach 16.66. So halfway between the 12.5 and 16.66 is 14.28571. 571. Okay, 14.28571 is not that really wow, because it was broken like the 37.5 here. Let's take the halfway between both of them. It's 15.38471, 38461, which is coming from 2 by 13 divided by 100. So I can take the full percentage. Didn't really work. So we have 2 by 13, 2 by 13, and you have 1 by 7. It's 15%, and you can get also 3 by 20 is 5 by 33, 5 by 33, 100 is 15.1515. 15.1515. So 15.1515 is better than both charts, both levels. But you remember, I need you to notice here something. This is why I pick up 15.1515, because it's coming from 5 divided by 33. So this is 5 divided by 33. 5 divided by 33 is a relation with the percentage that I'm watching. Okay, the 41.66. 41.66 is 5 by 12, and I have here 5 by 13. So there is a relation. This is why I pick up this percentage, not any other percentage. So 16.66 didn't work. I have the 25%, and I should keep also the 33.33. 25% didn't work. I should keep 33.33. 33.33, it will not be working because it will be nearby here. 15.1515. If you divide it by 2, which is a double, it's 13.30. 13.3030. So 30.3030. Not really that wow reaction. Let's go to the daily chart and we see. You see that we have reaction for few days. This is 13.3030. You can see that once we reach, we were trying to break out, then we have like 185 pip to the upside, and then broke it. So it's worth watching when you have a double percentage. Other percentage that I should keep is 20%. So 20% is coming from 1 by 5. So you have here, it can be 5 by 25, right? And you have the 22.22 as the next percentage. didn't work. The percentage after that is before that 21.428571. So back to the rule that we are having, the 20% did stop the market, so we need to keep the 40% in the future, and we will mark the 40% as a strong level because the 20% did stop the market for some time. So the 40% is important. Here we said 5 by 33 and you have 1 by 5. 1 by 5 can be also or 5 by 25. 5 by 25. Okay. 25 didn't work. 28.571 didn't work. And you have the 30.3030 and the 33.33 didn't work. 37.5 as we said before here it worked. So 21.428 one is 3 by 14. 3 by 14. Notice here it was broken by a bit. This is halfway, so we take 1 by 5, the 20%, and the 22 is 2 by 9. You have 3 by 4, which is 21.428571. If you take the halfway between both of them is 5 by 23. 5 by 23. You divide by 100, you get this percentage. So that percentage, if we keep it in the chart instead of the 21.428571, we can see it is much better, and we write here 5 by 23. So 5 by 33, 5 by 25, 5 by 25, and here you have 5 by 12, and 1 by 14. 40 is 2 by 5. 2 by 5 can also be 10 by 25. You multiply both numbers by 5. So 10 is 2 times 5. So there is a relation also. Okay, so now this is the relation with number 5, and we can see here 37.5. So 37.5 is 3 by 8, because we remember what we said, 37 all the time is broken by a bit. 37 is broken by a bit, so you have 3 by 8 is 37, and after that the 40%, the next level is 40%, which is 2 by 5. You get the halfway is 5 by 13. So 5 by 13 is 38.461. So you have 5. Let's remove that one. We can see that it's exactly where the market stopped. So this, I remove the 37 from here. I'll keep this one and I'll put it as strong here because it has number 5. So it's 5 by 13. I'll extend this 37 a bit outside so I will not be confused. So you can see here 5 by 13, 5 by 12, so 5 by 11 is 45.45. 5 by 13 and 5 by 12, it's 10 by 25, which is the 40%. So you have like a sequence. The halfway between both of them is a 40%, which is the double of that 20%. So 40% for me is important. 41.66 is very important. Both of them are very important for the future levels. Okay, now we said that 38.461 did stop the market at the pip, you know, like exactly. What if we take that percentage from here, we can see that it's better than the 37.5. Even so you were not aware about it before, you still be using 37.5. But due to the relation that we have here with the number 5, we can use a 38%. So back here, if we take from this major high, when we started trading, we can see that the 38 was exactly where the market stopped. And then after that 38, it came down to the 41.66 after pushing to the upside, then came down to the 41.66. Maybe this will be the case. This is the push to the upside, then you will have a push to the downside at 41.66 or a 40%. Both are make sense for me to trade. From the percentage here, you can see that 30 and 33. 30% is 3 by 10, 33 is 1 by 3, halfway 4 by 13, 4 by 13 is 31.25, which is 5 by 16. 31.25 is even this is a double number we traded, but 31.25, which is 5 by 16, did stop the market for at least 5 weeks. So I'll take this one out so I can see the numbers. 5 by 33, 5 by 25, 5 by 23, 5 by 16, 5 by 13, 5 by 12, and 10 by 25. Okay, so this is the chart, and we need to take more percentage from here and more percentage from here. What we understand that 31.25 stop the market here. You have here also the 22.22 stop the market, 21 stop the market. So let's take from that low here. If we take a different color, look at 25% measures. We start with the measures first. No reaction. 33.33. No reaction. We have 37.5 is overlapping with the 40%. But if we use the numbers that we are having, 38, that it used to stop the market after we understand the number 5, we can see that it is at this area. So this is hard because you have a nearby highs here. So whatever you are trying to do, for example, if you are taking from this high, you can see it's a bit higher. This is why it's confusing. So for that, I will keep 37. It used to be broken, so I will remove it. I will keep the 38 here from that high. Okay, 33.33 was broken. I remove. Halfway between both of them is 28.571. Between the 25 and the 33. You can see that the 28.571 did stop the market, overlapping with the 31.25. So this whole area was a reaction to the upside. Okay, no more percentage that we can carry from here. We can also take 16.66 as long we are studying the chart, and 16.66 did stop the market here. The level that I remember is 18.1818. Yes, it is. You can see here the 16.66 and the 20% halfway is 18.181818. 20% nothing here. Okay. 18.1818. 18.1818 you multiply by 2, you get 36.3636. So if you bought 36.3636, so we can check this rule, we can see that it's higher, so it will be a bit confusing for me. I will just remove it now. Okay, from this high I can take 16.66, measures nothing. Before that I have 8.33 and 12.5. 8.33 nothing. You have 12.5 measure Gann percentage, so 12.5 no reaction. 11.11 is a halfway between, so we can see that 11.11 did stop the market. 16.66 nothing, I remove, and double of that is 22.22. Double of 11.11 is 22.22. You can see that 22.22 was overlapping here. Next percentage that I should 28.571, as we understand from the history that it did stop the market before. We can see that it was with the 37.5, and we understand here at the 31.25 is valuable for us now. So 31.25 is not that really good, but we did use in the past 33.33 and 33.33. You can see that it's overlapping here, so this is why I'm interested in 41.66. What else we can use? If we use 30.3030 and we'll check 30.3030, it's not really a level that I be watching, but I prefer to use the halfway fixed number, which is the 30%. Here you can see that 30 is 3 by 10, which is a halfway. So 30.30 is this level, and it should be watching in the future as well. Next level is this one. Take 12.5. Nothing, no reaction. Have 16.66. No reaction. We learned that 20% is working. Yes, did work with the same levels that we were watching. And after that you have the 28.571, which it did did work in the past, so it's a bit lower. So we'll see once we reach down here what will be the reaction at this level. Should be watching also 33.33 and 31.25. I prefer see 33.33, nothing. So what did we learn here? 30% is working and 31.25 is working before. I'm trying to get an areas. So 30 is overlapping with the 40 and the 31.25, which did stop the market for a few days or a few weeks to the upside. You can see that it's here. So 31 I'm not interested. So 30 here, 30% is overlapping with the 50, and you have the 31 which did stop the market here for a few weeks, is coming at this area. From here and from here, if I take 16.66 and you can see that 16.66 at in the same area. You have the 20% did stop the market before. So you can see that the 20% did stop the market here, and it's overlapping here. We understand also here 18.1818 did stop the market. So if we put 18.1818 in between the 20% and the 60%, it should be overlapping with the other percentage. So this is very interesting, and you can see this is the levels that I should be watching in the future when it comes to trying to buy AUDUSD and hold it for a long time. So this is the levels I should be interested in: 40% overlapping with the 30 and 18.18. I'm more interested in 41.66 and 38, 31 and the 20%.